What's up, traders? In today's video, I will be performing a trade recap on this beautiful counter trend setup that I managed to catch on GBP USD. So stay tuned. Now, this is a trade that I managed to catch on the 8th of September 2022, roughly at the open of the New York session. I got tapped into a buy limit order after price traded into this 1 hour demand zone in here. I did hold the trade overnight, and then just after the open of the London session, I saw that price action printed this bearish pin bar in here, and that was the signal for me to close the remaining 50% of my position. Overall, I was aiming for this 4-hour supply zone. I was looking for price action to fill this imbalance, but I was happy to grab this was a 2.5% return trade. Because it's a counter trend setup, I only risked 0.5% of my account, so I did manage to bag roughly 2.5% on this particular counter trend setup. So what I want us to do in this video, and I will be showing screenshots of when I entered the trade, when I closed 50% of my position, and when I closed the remaining 50%. What I want us to do is I just want us to go through the entire process of identifying that higher time frame narrative and then showing you guys how I managed to identify this particular setup, right? So what I want to do now is I want us to completely clear our charts here. So you'll notice that this is the particular move that we managed to get involved in. Having cleared our charts now, what I want to do is I want to drop all the way out to the weekly chart, and the only thing I want to point out to you guys is I want to point out this weekly demand zone in here that is actually this wick zone down here, right? So as you can see, GBP USD has been in a prolonged bearish trend. All right, I do think that there is a possibility that price action could even trade lower than this demand zone, but right now on the weekly we can quite clearly see that price action has traded into that demand zone, and you can see that we've had an initial nice bullish reaction out of that weekly demand zone, right? So from that weekly chart we now drop down to the daily, and the only thing we want to do now is we just want to mark out our external structure swing points. So obviously we can see that price action is trading bearish, so we know that price action is in a bearish state. And what I want us to do is I just want us to quickly map out the relevant structure swing points. So we can mark out our first swing point in here. Then we have price action pushing down, creating lower lows, okay, creating lower highs, until of course price action then pushed down to form this new lower low at the bottom of that weekly. So essentially what price action has been doing is price action has been pushing down lower in this manner, right? So we can quite comfortably see and quite clearly see that price action has been trading down bearish, right? What I now want us to do is I want us to mark out our most recent break of structure to the downside, which would be this one in here. So this would be our major break of structure to the downside. Now the reason I want us to mark out this particular break of structure is because it then gives us a very clear daily bearish leg that we're playing within. So what we can quite comfortably and quite clearly see is that we have our strong high in here, okay, because this high did its job, it violated and it created a new low. So this is our strong high on the daily chart, and then down here we have our weak low. So essentially you can see that after this break of structure, price action has now generated a new daily leg for us, a new bearish daily leg. So what we can then also do is we can bring on our premium and discount tool, and then we can mark out what we regard as premium and discount pricing. So again, everything above our 50%, our equilibrium, would obviously be our premium pricing, and then everything below our equilibrium would be regarded as our discounted pricing. So this is where the trade idea started to develop for me. I noticed that we had now created this new bearish leg, and we were anticipating this bullish reaction, right? So that's where we are now seeing that the daily is pointing bullish. The next thing that you want to do is after you have generated your bearish daily leg and you have identified where your premium and discounted pricing is, what you want to do is you want to go ahead and you want to mark out any relevant supply and demand zone. So the very first supply that I want to mark out on the daily chart would be this supply in here. Now this supply is significant because it actually sits at the equilibrium. Okay, so a lot of times when you're trading premium and discounted pricing, you won't always see price action trade deep into your premium pricing in this case before price action pushes down. A lot of times you might just see a mitigation of a supply zone like this that sits at equilibrium before price action rolls over, because you need to understand all price action is looking to do is just looking to grab a slightly better price before that underlying trend continues. So this particular daily supply zone is a very interesting area for us. It is an area that we can target this particular bullish recovery to reach, all right, before potential rolls over. You can see that we do have a little bit of imbalance that is left behind in here. If you haven't already, make sure that you watch last week's video where I give you 2 very simple rules to identify imbalance when trading smart money concepts, right? So valid supply zone in here, and then another one that I want to mark out as well, it would be this supply in here. So just very quickly, we've got 2 valid daily supply zones that we can anticipate price action to pull back towards before potentially continuing with that underlying trend. All right, so the daily chart is showing us that we are now in a bullish pullback. Okay, from the daily chart, I then drop down to that 4-hour chart. So once you've dropped down to the 4-hour chart, what you want to do is you want to go ahead and you want to see if your daily supply zones that you have mapped out can be refined at all. And once you do that refinement on the 4-hour, you can quite clearly see the imbalance zones as well that exist just below, right? That exist just below those supply zones. So from our 4-hour now, we can see that we have our bearish daily leg, okay, in here. We can see our break of structure. Now what I like to do as well, once I drop down to my 4-hour chart, is I like to mark out my 4-hour swing structure as well. Okay, so if we just look at it from the top here, so we can start off here at our daily swing point, and then you can quite clearly see that price action is pushing down lower. So you've got something like this all the way down to here. When it comes to mapping out your swing structure, all right, it's all down to you and how closely you want to follow price. Because what you could have easily done is you could have easily mapped out this as a swing low. Okay, so price action does this, then it pulls back before it rolls over. Okay, you could do that, or you could just mark out the entire move to the downside as one move, and then you push up, and then you have something like that. So it's all about how closely you want to follow price. Okay, but essentially what we have is we have the 4-hour pointing bearish as well, and then our last significant break of structure would essentially have occurred in here. Right, so what I'll do is I will mark this out as my last significant break of structure to the downside. And what this does is this generates another bearish leg for us here. However, this time this bearish leg that is generated is on the 4-hour chart, right? So this is going to be my strong high on the 4-hour, okay? And then this is going to be my weak low on the 4-hour. Okay, so just to recap, you can see that we have our daily bearish leg in here. Okay, you can see that we have our 2 daily supply zones in here. Okay, we also have our 4-hour swing points marked out in here, and those 4-hour swing points have generated another bearish 4-hour leg here. So in order to make it clearer for you guys, before I actually mark this out, I'm going to remove the daily premium and discounted tool, and then what I'll do is on the 4-hour chart I will bring on that premium and discounted tool just to show you guys exactly what it is that we are now playing with. And so this is my 4 hour, my most recent 4 hour bearish leg. Okay, there's my strong high, there's my weak low. Now obviously this is where the trade generated for me, this is where the trade happened, but I'm just going to bring price action back a little bit here to the 7th of September. And essentially this is what I was looking at when I was analyzing the markets. Now notice how, okay, and this is where experience is going to come in very handy when you're trading premium discount. Notice how this 4 hour bearish leg, okay, this 4 hour bearish leg, it sits below that daily supply zone that sits at the equilibrium. If I just very quickly drop back out to that daily chart, notice how, okay, this 4 hour bearish leg sits within, or sits below the daily supply zone that we marked out. Now obviously the anticipation is for price action to pull back and mitigate this supply zone. Okay, that's what the expectation is here on the daily chart. But if price action were to do that, notice that it would be violating the 4 hour strong high. Now that might be a bit confusing, because what we've been saying on the channel is if you're trading premium and discounted pricing, your strong high should technically be holding, and you should just be looking for price action to take your weak lows. Okay, but in this case, obviously your daily chart will take preference over your 4 hour chart. So even though we have this 4 hour bearish leg in here, the anticipation still is, from a daily point of view, for price action to pull back potentially towards that daily supply zone, right? The only reason we mark out our 4 hour bearish leg is because from an intraday and an intra-week trading point of view, I like to follow my 4 hour closely. So my 4 hour helps me with determining what the overall daily direction is, the direction that I want to be trading. So because I have a bearish 4 hour leg in here, I still only want to be trading price action up towards discounted pricing of that 4 hour leg. Even though I could be aiming for this, I want to follow my 4 hour closely. So after we map out that 4 hour bearish leg, what I then do is I mark out this 4 hour supply zone in here. So this is a 4 hour supply zone that sits within premium pricing. We have a little bit of imbalance sitting just below that. And what we can actually also see is we can see that price action has created some liquidity in here already. So at this particular point in time, on the 7th of September, what I'm looking at is I'm looking for price action to trade up to at least this 4 hour supply zone before potentially rolling over and continuing with that underlying bearish trend. Even though I know there is a possibility that price action could pull back a bit deeper to mitigate that daily supply zone. Okay, so we have this 4 hour supply zone. We are now looking for counter trend setups here within discounted pricing of this 4 hour bearish leg to take us up towards this level in here. Okay, what you can also see is that price action actually initially trades into this 4 hour demand zone down here. Okay, now the reason I wanted to bring on the bar replay tool and pull price back just a little bit was because I wanted to show you guys something that tends to happen when you're trading smart money concepts in this way. So you can see price action, right, after giving you an initial bullish reaction off of this 4 hour zone. Remember, this 4 hour demand zone is going to be regarded as the extreme zone of this 4 hour bearish leg. After that initial bearish reaction though, you see price action immediately pushes down lower. And what this push down lower did is this push down grabbed liquidity that sat below this weak low. Okay, you guys need to understand, even though smart money concepts trading, supply and demand trading, looks to follow the big money, these particular setups can be manipulated as well. And this is what happened in here. Now you might be thinking that when price action does this, it means that the week low has now broken down and you should be looking for a new bearish leg to play within, right? And that technically would not be wrong. However, the fact that price action traded below and immediately above this low needs to tell you, or needs to give you an indication, that this was just a liquidity grab and that the week low, for all intents and purposes, is still in place. Remember, price action generated this liquidity in here. Now you might confuse this as price action grabbing premium pricing and then rolling over. Okay, it's very easy to do that, and that's why I'm saying you just need to put a lot more time into trading these concepts, because the more you trade them, the more you'll notice scenarios like this and you'll be better prepared to actually react to them and trade them. All right, so what price action actually does is it grabs that liquidity below the 4-hour week low, okay, and then it obviously shoots up. So I'm regarding this purely as a sweep of the week low. My 4-hour bearish leg is still in place. I do not have a new 4-hour leg in here. Okay, I am still anticipating price action to potentially pull up towards this 4-hour supply. All right, so from that 4-hour, if we now drop down to the 1-hour chart, you'll see that this is that sweep of liquidity below that 4-hour week low. You can see that this is my premium and discount of that 4-hour leg in here, right? So there's my leg, and essentially what we're looking for is we're looking for price action obviously to trade up towards this 4-hour supply. So the area that I was actually looking to trade from, I identified in here. So it was this candle in here. The reason this is a 1-hour demand zone, the reason it's a valid demand zone, is because if we zoom in just a little bit here, what you'll notice is after the sweep of liquidity took place in here, we obviously had this large bullish engulfing candle that pushed price up, and then we had this candle that formed in here. So this was kind of a little bit of a pause in this bullish momentum. Now what this candle did is it filled the imbalance that was left behind by this big bullish candle, okay? And what it then did is subsequently it generated another valid demand zone. The reason we know it's a valid demand zone is because it actually led to a break of structure, a bullish break of structure to the upside, which is one of the reasons, or one of the things that you want to look for when you're identifying supply and demand zones. So we have a demand zone that leads to the break of structure to the upside, and what I actually did is, if I drop down to that 15-minute zone, or to that 15-minute time frame, I was actually able to refine this 1 hour's down towards this candle in here. And I'm going to try and zoom in a little bit more just to show you guys. I actually managed to refine it down to this candle in here, okay? Because essentially what price action is doing here, we have a rally, a base, and a rally, okay? Classic demand zone, classic S&D formation, okay? So if I drop back out to that 1 hour chart now, what you'll see is that essentially I was waiting for price action after I saw this break of structure. I was waiting for price action to pull back, mitigate this level, and then I was looking to trade price action up towards there. So if we quickly bring on our bar replay tool again, what you'll see is after the initial break of structure, we did have a pullback, but we didn't quite mitigate the zone, okay? What we then actually did is we went and put in another break of structure to the upside. Now, all this did is this just generated some liquidity for us, which was a good thing because it left some liquidity just above our demand zone that we're looking to trade. So what I then did is I placed a buy limit order in here around 4720, okay? My stop loss was just above, the week low. I gave it a little bit of space below the actual zone, okay? And what I was looking to do is I was targeting this imbalance. I was targeting this 4 hour supply zone up here. Okay, so it was just a case of purely waiting for price action now to pull back and see whether or not we could get a mitigation. So bang in there, very simple. Price action pulled back and it mitigated the 1 hour demand zone. It tapped me into my trade. And if I just very quickly bring you guys to my trading journal here, this is the screenshot that I took when I was tapped into the trade. So we had this large bearish candle that kind of spiked down. It grabbed that liquidity, tapped me into my trade at my limit order, and now we're in the trade. Okay, now this occurred at the open of the New York session on the 8th of September. All right, so this was a Thursday. I took the decision to hold this trade overnight. Why? Because I was looking to break even at this point in here. All right, so that was my break even point. So we got tapped into the trade. Now it's just a case of allowing price action to do what it needs to do. At this point, after I got triggered into the trade, I wasn't looking at my charts at all. Okay, this is now where the Asian session kicks in. So you can see we had a lot of volume during that Asian session. It actually pushes price action up. Now the point at which I closed 50% of my position was in here. So this was roughly around the time when I got to my charts on the 9th of September, so the Friday. So when I got to my charts, price action was hovering around here, and this is the point in here where I closed 50% of my position and I moved my stops to break even. So if I bring you guys to my trading journal once again, this is the screenshot that I took when I closed 50% of my position. You can see just towards the end of the Asian session here, I took the screenshot on the 9th of September, 7 minutes past 8 UTC plus 2. This was just around the end of the Asian session. I decided to close 50% of my position. I moved my stop loss to break even. Now the reason I do this is because when you're trading smart money concepts, all right, price action is always mitigating supply and demand zone. It's always reacting from S&D zones. So whenever price action hits my break even point, I want to take some profits off the table, and I want to move my stops to break even so that I'm risk free, so that I can allow trades to do what they need to do. Okay, I was very aware of the fact that we had this 4-hour supply in here that I was aiming for, but as price action trades towards that 4-hour supply zone, it creates or it prints this bearish pin bar. Now once price action printed this bearish pin bar, I thought to myself that this was an indication, an early signal that we could be seeing a bit of a pullback, a bit of a bearish pullback. Now what is this particular level reacting off of? If you just investigate and if you look to the left, you can see that you actually have this 4-hour, this 1-hour supply zone in here that price action was actually reacting off of, right? So once I see that pin bar, once I see price action coming in and reacting with this 1-hour supply, that's the point where I told myself that I am comfortable taking off the remainder of my position. Now, yes, we're still aiming for that daily supply zone all the way up here, okay? And this might very well just be a small reaction before price action continues higher. However, my rationale for closing the trade here was I did not want to sit through a bearish pullback on a Friday, because if I had to do that, okay, it would mean that I would have to hold the trade over the weekend before price action potentially traded bullish again. And I did not want to hold this trade over the weekend, purely because it was a counter trend setup and I just wanted to get in and out as quickly as possible. So this particular bearish pin bar was the catalyst for me to close the remainder of my 50% position. And this is the screenshot that I took when I eventually closed that remaining 50%. So overall, I managed to bag around 2.5% on this trade. If I just go back to the charts here and allow price action to play out so we can see how price action closed, you can see that we did indeed have a rather aggressive bearish reaction, right? We did have a rather aggressive bearish reaction from that 1 hour supply zone, okay? And this is where price action closed. So anything could happen at this point. We could see price action trade a bit higher, or we could just see price action roll down to take that week low that we identified on the daily. So a very quick look at how I managed to grab a counter trend setup here on GBP USD following that higher time frame narrative. Only 2.5% grabbed, which I think is a good amount of return for a counter trend setup like this, because remember, you're trading against a lot of higher time frame momentum here, right? So you don't want to be too greedy when you're trading counter trend setups. If you guys enjoyed this video, please make sure that you hit that like button. Make sure that you subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.